What is up everybody, Gifford here and welcome back to another stock market video where I try to make money. Today I want to talk about the current market downtrend and why I'm losing money. My portfolio is much larger than when I started last year, which is over $50,000, and I'm also in speculative stocks. And these swings are starting to be very big in the thousands. One of the major reasons why the market has been going up is because of low interest rates and also what is known as TINA. TINA means there is no alternative. When interest rates are low, specifically mortgage interest rates, no one wants to put any of their money in the bank because the percentage that you get back is very low, less than 1%. When the interest rates get so low, it's very appealing to start putting your money in other asset classes, which is property or most likely stock market. This brings me to the first reason of why the market has started to head down. Let's go into the computer and check it out. So reading from CNBC article, Powell says Fed will discuss speeding up bond buying taper at December meeting. So reading a key point, Federal Reserve Chairman Jerome Powell said he expects policymakers in December to discuss accelerating the timetable for the tapering of monthly bond purchases. And this is important to us because what's basically going to happen is the removal of its efforts to boost the economy as it battles escalating inflation pressures. This will mean they slowly taper off the financial services that they've been given to businesses due to rising inflation. They do this by raising interest rates, specifically home loan mortgages. With the rising home loan interest rates, this then makes it more attractive because when those rise, so do the term deposits. The people then decide to start taking their money out of the stock market and then start putting it back into long-term deposits. It's much safer to have your money in the bank as opposed to the stock market, even though you don't get a better return. The second point is we have a new variant of the pandemic, which means this new C19 brings volatility and people are uncertain. They're not sure how much it's going to affect them and the economy. Therefore, we could have further shutdowns. It's my understanding that we're further along this and we know a lot more. So I think, especially in New Zealand, we're not going to have as many lockdowns like we used to when we first started. However, the rest of the world are starting to accept that we have to live with this, and therefore I don't think it's going to be a bigger impact as what everyone thinks. And a third thing that I want to bring up, which I observed last year happening, is the tax harvesting. So I'm not really a tax expert, so I don't really like talking about this, but I know that in New Zealand you can't really carry this over like they do in the States, mainly because we have ring fencing laws. But here let's just read what tax harvesting is. In tax loss harvesting, you sell your stocks, funds, units at a loss to reduce your tax liability on capital gains. It is a method to offset the capital gains made on equity against the capital loss suffered to pay a lesser amount of tax. To get a lower tax bill, they've been selling the stocks that are currently down because they've made a lot of money in other stocks. But to be honest, I don't really know how much this tax harvesting affects the market. I just know that it does tend to slow down around about December, and tax harvesting is always brought up in the news about why people sell their stocks or why the stock market is going down. So what am I currently doing in the month of December with this downtrend? So a few videos ago, I sold 60% of my Tesla shares because I knew something was going to happen in the stock market. I wasn't sure when it was coming. It's come a little bit quickly. I don't know if it's still the bottom yet, but I have 50% cash in my hatch portfolio for my long-term holds. What I'm going to be doing with that is waiting for Tesla to come down into the buy range of $800 to $900, and then I'll be buying some more if it ever gets there. I'm not sure if it will. But I'm just going to keep that cash position in the hatch portfolio. As for my interactive brokers account, that's my options play and it's currently down at the moment. I'm going to do a video of how much I am down by, but I have been collecting money on that passively over the last 3 months. But right now, it's because the underlying stock is down, I've actually lost quite a bit of money on that, but I'm just going to carry that on. Luckily with options trading, you can keep collecting money on stocks that have gone down, but I'll show all that what I'm doing in there. Also in my small Sharesies account, I am heavily down on a lot of stocks that I kind of potentially buy because I kind of use those ones of certain stocks that I'm looking into in new stocks, and some of those stocks have been totally beaten down. So the biggest losses in there are minus 45% to about minus 20%, and I've sold all my stocks in positive to buy the dip on all the other ones because I don't have extra money at the moment for that account. So I've sold all my winning positions to buy the dip on these ones, and it just keeps going lower. So I'm just going to continue on. When I get more money, I will buy some more of those stocks. By the way, if you're interested on any of the trades I do, I post them up on Instagram during the week, so feel free to follow me there. With that said, thank you for watching, and the platforms I use to invest in is Interactive Brokers, Hatch Invest, and Sharesies, and I use Invest Now for my index funds. If you want to start your own investing journey, feel free to hit the links below. Give us a like on the video, feel free to subscribe if you like this kind of stuff. With that said, thank you for watching and I'll see you in the next one. Goodbye.